Yo, yo, yo. Welcome back to the channel. Today is September 29th, 2021, and we're going to be analyzing AMC stock. Uh, if you're new to the channel, or if you're returning for that matter, always a reminder, the best way to support the channel is to watch until the end. So as long as the video is keeping you engaged and you feel like you're being informed, make sure you stick around as well, if you can, of course. As well, like and comment. YouTube values engagements, and all of those actions can help me reach more people. So I appreciate that. With that being said, let's get right into the video. So today with AMC, we saw a further downward move. As I was sort of projecting in my last video, you can kind of tell that the sentiment for bulls is in a pretty bad place right now, which I think may or may not be the worst thing, but I just want to talk about the basic things that I've been breaking down just in case you're new to the channel and this is your first time watching me analyze this stock. What I think is going on here is we are completing, or we're in a wave 2 right now off of a completion of a wave 1 that ended here at the $52.88 level. We held support here at the 0.618 and 0.65 Fibonacci levels, which were $37.24 and $38.01 for a while. And today we have significantly broken them, which doesn't necessarily mean that that means that we're going further down or this is no longer a wave 2. And I'll show you some examples of times when AMC has actually broken these levels and still maintained an upward trend afterwards. In the short term, what I'm looking for is to maintain this is holding a trend line off of here, the bottom that we had at $28.70 or so, $28.82, however you want to count it. And then it has another wick that comes down and touches here that kind of ignites this rally up to $52.88. And that one was $29.31, a few days after the bottom of $28.82. So right here, you can actually see we are very close to hitting this support trend, this potential support trend, I should say. Everything is potential until it's proven, okay? And again, nothing in this video is financial advice. I'm not a financial advisor. I'm also not here to predict the future. I'm here to analyze the chart and give you my take on it. I am generally bullish on the stock, so that is my bias. So now that you know that going in, and I may make a bearish video soon, just to display what bears might be looking for, that sort of thing. But for now, let's just talk about the bull scenarios and compare, technically compare AMC to itself. That's what I want to do. So let's take this Fibonacci off. Just remember this level, the 0.786, $33.97 is kind of the next retracement level that we would get down to. And also, I've been charting this falling wedge that we've been in. So top line would be like this, which is kind of like your downward bearish trend that we've been in past couple weeks. There you go, wedge. So this is the wedge that I've been drawing, and you can draw multiple wedges whenever you're in a falling wedge, especially towards the end. You can draw the wedge a bunch of different ways because it kind of creates itself inside of itself a little bit, if that makes sense. So basically, as you get into smaller and smaller time frames, you get closer and closer in, you'll actually start to see that, oh, this reversal trend has been developing itself for a while now. So you can shift the lines and make it fit a few different ways. It really isn't invalid until you really get into a territory where, you're not, it's not a wedge anymore. I mean, this is a wedge, right? This is still a wedge if it were to come all the way down here. Now, this is a descending triangle. That's different, right? So if it gets to this parallel sort of level, which, I mean, this doesn't really look like a descending triangle, and we probably would pop up before then if it does end up being a descending triangle. So you'd probably see some relief up to the top side of this thing probably. But anyway, sorry, just went on a tangent there. I didn't mean to. Let me draw my wedge again, get back into it. And for those who don't know, a falling wedge is a bullish reversal pattern. And I've been charting this thing for like 2 weeks. And it's respected it pretty well. Another characteristic of a falling wedge is that you have volume that is dying out. So, towards the end, the volume gets lower and lower in the wedge. So I can illustrate that for you here. And overall, volume has been pretty low on the stock recently. So, and I know a lot of people ask me about that. I don't really analyze volume too much, but we will talk about volume briefly in the video. But basically, what I'm looking for is you have a few things going on, right? You got the falling wedge, which is typically a bullish reversal pattern. You have this potential upwards trend line that is going to be looking for a test here. Like, I think definitely we're going to touch this thing. I'd be surprised if we didn't. And then you have your Fibonacci. So let's pull that up here. And all of these are relative levels, right? So I'm not saying like, oh, it's going to hit this exact price and it's going to stay right there. No, like, you're going to see the level get respected, similar to how you've seen like at the 0.5 at $40.79. You see how it breaks below it, but then it comes back up to test it again. It breaks below, comes back up and tests again, breaks below. Like, it's not as simple as saying, oh yeah, it's just going to touch that and go right back up. Sometimes it's like that, but most of the time, you're seeing some trading happening there, and that's what makes these levels significant. So anyway, what I think from a short-term bullish scenario, right? If we're gonna see a reversal in the short term, what it'll probably look like is, I mean, it'll happen in pretty short succession here. But for the next few days, what I'm expecting is a move up here. Maybe you touch the top of the wedge and then you get pushed back down again in this fashion. And maybe you touch back to the top and touch back down again, and then you break out to the upside like this. Or perhaps, bears just get really pumped up here. We break down out of the wedge to the bottom, test the 0.786, and we do something like this. We break out, right? And basically what that would be is a false breakdown, which would be a bear trap type scenario. So that's kind of what your bullish reversal looks like at these levels for the 0.786, etc. Again, I mean, this trend line could prove to be like a new kind of move that the stock is going through. So it could just move up, boom. You could just tap it and then hop right up here. So those are some of the bullish scenarios that you could see playing out in the next few days. But I think that it's important to note that, and I do want to discuss the Elliott wave count, as I've discussed before. What you have going on here, I believe, still. And look, I mean, I know everybody on Twitter, and it doesn't really bother me. Everybody on Twitter is like, you said we were in a wave 2 and that wave 3 would be starting and blah, blah, blah. And none of that, I mean, look, you can say that I was wrong if you want to, but nothing that I've said has been invalidated by any move so far. And I understand that this is a very emotional move, but at the end of the day, you can't prove that this isn't a wave 2 until it double bottoms, right? Until it touches the bottom of this move, which would be $28.86. Or like if you wanted to do it from like a candle, you could do like $31. Like, it just depends on, some people will only measure by candles, but I think that it's better to measure with Fibonacci from the wicks, on this stock, just because the stock is pretty volatile. It's relatively volatile. So you're going to see, and sometimes you can use the bodies of the candles and get a different trend or something else out of that. But a lot of times with this stock, it respects the Fibonacci's based on wicks. It respects patterns based on wicks, things like that. So again, I know I got sidetracked there, but I just wanted to nail that point home, and show you guys basically what I'm looking for. So if in fact this is a wave 2, and note I say if, In fact, this is a wave 2, which is what I believe. That's my current conviction. And I'm open to changing my conviction. So it doesn't mean that, it's my conviction forever. But if it is, the way that you would measure, and then assuming that we get a bottom of the move here in the $34.30 level, something like that, right? Yeah, you measure from the bottom of this move to the top of this move. So $28 to $53 and then back down. If this isn't in fact a wave 2, then we would be going into a wave 3 that you would see some sort of upward trajectory in this. And again, wave 3 is usually the most emotional and impulsive wave. So let me get my Elliott wave count. So it would look something like this: 1, 2, and then maybe you would see an impulsive move up to here, 3. And then I don't want to get too far into this because the measurement for this would be a little bit different. Because I think that this is a macro wave 3, which you would actually measure the potential tops for this. Like we've measured the potential tops before. And just to show that to people who may have not seen it before because they're new to the channel. If you would have done an extension from the bottom of this move on January 5th, starting at $1.90 to the top of the move, which was $20, back down to the $5.26 after its correction, you will see here that the 3.618 level, which is at $71.80, pretty well predicted what the top was going to be in June, because the top in June was like $72 basically, on this chart at least. So if we were to be measuring and basically what I'm trying to say here is we could be in a similar move to here that you see in May, the move in May. So basically the way that you would have counted this is 1, 2, which is where I think that we are, something like this. If we do go into this crazy macro move, right? And that's not guaranteed, but I'm just saying. So then you would have that impulsive 3, you have a 4 down, and then a 5. And that you can see that this could get pretty vertical if it does go into this sort of explosive move. And all of this is still on the table. Now, there has been some interesting stuff going around recently when it comes to cycle theory and things of that nature that would insinuate that perhaps we're at a different point in it, and it depends on if you like cycle theory or not. And I don't want to talk too much about cycle theory here. I might make another video where I talk about that, but where we could be at a different point in the cycle than everybody thinks that we are, because a lot of people have been measuring it based on days, and there are similarities because I do believe that the trading algorithm or whatever bots are working on this thing does project the same pattern over and over again, so it becomes harder and harder to distinguish one move from the other, right? But I will say that looking at it now, right, the way that this move looks now, perhaps it's something more similar to earlier, right? Maybe it's more similar down to this, the move in April, right, from late March to mid-April basically. Or maybe it's more similar to late April to early May, which was kind of what I was thinking anyway. I was thinking that we were in this one. And I know a lot of people were saying that we were going into this move here. That was a late May move right before the run-up in June. But, I mean, it's hard to say. But what I will say is I know that a lot of people are like, oh, everybody feels like the stock is dead, basically. That's what's going on, which is good. I don't know. That, to me, it's kind of like a good buying opportunity, is what that sounds like whenever people are like, it's dead, it's dead. But as you can see here, the $33.76 level is the 0.786, right? And the reason that you're feeling so much emotion is because we've broken below the golden pocket. But I wanted to show that, and the golden pocket is significant. Don't get me wrong. I'm not sitting here saying that it's not significant, but I want to show you other scenarios where AMC has actually broken below its golden pocket on a move and recovered. So on March 4th, the stock was $7.62. And um, on March 18th, if you want to measure it from there, it was $14.65. So it pretty much doubled in price there. And then from there, the following days, it went down rapidly to $9, which is the 0.786. And you can see it bounced right off of this a couple times. Comes back up, it trades above the golden pocket, breaks below again, and it actually even broke below its 0.786. It went all the way down to $8.27 in this scenario. And then it came back up. And you obviously you can see the rest of what happened after that. That basically the last time that happened was April 13th for this 0.786. You measure it from here to here, right? So from April 13th, the stock was at $8.27 to April 27th and went to $12.25. You even had another run down here and tested the 0.786, which was $9.12 at the time, and it kind of just crashed right through the golden pocket in this scenario. And that move ended on May 6th, and then it started to move up again. And then you see what happened, right? This right here is absolute fear. 0.786, it's over. You broke below the 0.786, it's over, right? And not to mention, this happened after a lower high from this level in March. You had a lower high, you got rejected down, went all the way below the 0.786, and then look what happened. A couple weeks later, you're crushing all-time highs. And look, I'm not sitting here trying to like talk you into the stock or tell you to hold or buy or sell or whatever. I'm just saying that your fundamental conviction is important. It's important to know why you got into the stock in the first place. And if that hasn't changed, then I would say that you're probably making an emotional decision if you decide to sell. Obviously, you need to do what's right for your family, and you need to make sure that, you aren't over leveraged in your position and stuff like that. And I know that this isn't the right time to be telling a lot of you that, probably. But you at the end of the day, you got to make your own decisions, right? And to me, I don't know. Now that I'm looking at it, maybe you could say we're in a pretty similar scenario here, right? Maybe we do come down and we break that 0.786 and everybody loses their minds. I'm going to tell you right now, I personally, I see more downside in the short term. That's what I think is most likely here. I think that we do go down and we test this thing, $33.73. That's what I think we do. Okay, we got a little bit of time here still. I know you guys are probably a little bit of time. 18 minutes. Your videos need to be shorter. I get those comments all the time, but I think that I actually prefer sitting here and walking through it all. So, there are other channels that have maybe shorter analysis. I just like to go in depth, So, let's see. Yeah. So also, I did want to visit the linear chart right quick. I don't really use linear that often, but I did want to look at it because somebody did send me like the linear trend was still being held basically, and I just want to check the status on that. I'm not sure how they would have measured it. Yeah, I think they would have measured it like this, and it broke today. So linear looks, that trend doesn't look like it held based on that person's tweet, or I think it was a comment actually. YouTube. All right, so let's go to the next thing that I wanted to talk about, which is previous broken trends. Oh yeah, so here you had a bullish trend that you could have said you had like going here, right? From before the run in June, like May 6th is when it starts, and it went all the way up here to September 14th. And then since we broke that trend line, we saw this correction down, and so far it's been about 26%. But there have been other instances of this when we would have been looking at a trend line like this. Perhaps, I think it was me. Sorry. I was doing this before the video, but it's kind of hard to like remember every trend line, and I don't want my chart to look like all crazy whenever you guys take, whenever the video opens up, because it makes it too confusing. So if you would have measured from January 15th into this February, late February, early March, mid-March kind of zone, you see this break of this trend. I'm sure people were using this trend at the time. This was before I entered the trade, but you can see here, after it broke here, you saw a 25% correction, and then it actually ended up being about a 31% correction, all the way down to $8.23 at that time. And the stock recovered. And then if you would have shifted that line, maybe, right? Because then this is what happens, I mean, people start to go, okay, well, maybe this is the trend line then. It kind of dipped below here, and then it caught itself. And then from April 13th till April 29th or 30th, you were riding that. And then you had another correction, and let's measure from that trend line down. You had a significant, like, 15%, 13 to 15% correction there. So yeah, I mean, I just wanted to go over that just to show you guys that not maintaining a trend and breaking below a trend doesn't necessarily kill the stock forever. You could also do like a trend line here from early May to late May, and then it touched down here in July. Once it broke through, we saw a 23% dip. I mean, so like I said, multiple times we've had trends that started before a big breakup that got retouched and then broken afterwards, and then everything was fine for the stock. You still saw more highs after that, right? And then let's see what else. Oh, and everybody talks to me about volume. Again, volume lowering in a falling wedge is actually a bullish signal. You want volume to be lowering when the price is lowering, because basically it insinuates that bears are running out of breath, essentially. Like, they can't, buyers aren't coming in because they're waiting for the next bottom of the move, right? So they're kind of just waiting and seeing what's going to happen, and then they're going to come in and buy and move the stock back up. But it shows bearish exhaustion. Now, if volume was super high and this move was going down, then that is a bad sign. That means that bears have strength. Bears have a lot, like a lot of fuel, basically. So it's actually good that volume's down. And then I said to look at the weekly volume. And actually, if you wanted to make a comparison here, you could see here that in November, what the hell? I don't want to look that far back yet. Maybe another video or something. But you can see that going into the first week of May, volume was basically at its all-time low. And then obviously we all know what happened like a month later there. And I mean, if you're looking at the volume hasn't really been this low in a long time. So, I mean, to me, overall, volume is bullish, not bearish. I know that I get like a million comments a day, like, look at the volume. I mean, where's it going to come from, Like, that's kind of the nature of this, though. Like, okay, since this year, this is basically the lowest volume has been all year, which to me is a good sign. Because right now we're running down. If we were running up and volume was this low, then that would be concerning. But the fact that we're running down, it means that it just seems like bears are getting exhausted. Buyers just haven't come in yet. Buyers are looking for a better level. They're just waiting. So that's how I see that. And you can Google all this stuff too. Like, this, like, do not just trust me and my word for things, okay? Like, go Google, is lowering volume bullish, blah, blah, like, whatever you got to Google to figure that out. Pull a bunch of opinions. Maybe there's a bunch of people that disagree with me, but that's just based on my experience. Yeah, so that's pretty much the video. It's just, some technical analysis, what's going on in the stock, things that I'm paying attention to, trends that I'm paying attention to. To be honest with you, we're pretty much in the same place that we were yesterday. I think that if anything, we're just proving that we have to go back down further, and I think we need to go back down further and find support at the 786. And I mean, more bearishly, I don't know. At that point, right? If you go down to the 2881, which was the bottom after that run, obviously you want to see that held as support. But then like the next levels are like $22.15, $18.68 as far as like where this thing can run down. But I know for me, I entered back when it was like $10 or $12. And I'm not gonna exit here. Not me. I invested April. So I'm gonna hold on. And to be honest with you, I'd be buying at these levels, so because this is gonna be good opportunity, in my opinion, like personally. But obviously everybody's gotta make their own decisions. Again, I'm not a financial advisor. If you stayed this long, thank you so much for spending your time watching the video. I appreciate it a lot. I hope that I help bring some more balanced perspective and help you remove your emotions from the play, and help you look at it from a perspective of, okay, what are other people's emotions and how do I understand them better so that then I can understand where the stock actually is versus looking at your brokerage account balance or whatever it is that you're using to measure, because that stuff is all designed to trick you. I mean, it's all psychological, man. Like when you see a super high balance, it makes you not want to sell, right? When it's going up really, really fast. And when you see a super low balance, it makes you want to sell because you see it going down really, really fast. It's important that you can take a step back, look at the stock. That's why, like my trading view and stuff like that, I don't even know if you can connect it, but I would never connect it to a brokerage account or anything like that. I would only have trading view, and I don't even look at my portfolio balance. I strictly look at the chart. I strictly look at trading view, and I just want to understand the price. I don't care what that means for my position and what my position's value is. I'm simply looking at the chart, and I can only do that because I invested a certain amount that I'm willing, I'm okay with going down a certain percentage or whatever. I don't have stop losses. I don't have any of that stuff. And I sit here, I analyze the chart, and I maintain my conviction, and my emotions stay steady while I'm analyzing. So hopefully that helps. That's just what I do, though. So everybody's different. But yeah, if you enjoyed the video, make sure you drop a like, comment down below, and share this video with somebody if you think that they could gain value from it, if they could learn anything. Hopefully you learned something, or at least maybe you got a new perspective that maybe you weren't considering beforehand. And if you think I'm wrong, make sure you drop a comment down below and tell me what your opinion is. And yeah, I might make another video today. I don't know. But if I don't, I'll see you guys on Twitter in the comments down below as well. And until next time, thanks for watching.